Welcome to the Rigatoni Capital podcast. I'm your host, Colin. It is March 1st, Sunday. On this podcast, I'm going to go over a few things, including the market sentiment based on last week's earnings, kind of touch on last week's earnings. And I think a few days have gone by now that we can realize that NVIDIA's sell off was stupid. The US defense manufacturers, I talked about this yesterday briefly. I want to touch on it again. You know, this is in regards to the ITA ETF, which is the Aerospace and Defense US Manufacturer ETF, versus picking individual stocks in that ETF. What's the best route to go here? And then we can touch on semis and Broadcom reports on Wednesday and what to expect. And then my 2026 watch list as well. I'll go over briefly. And this show is for long-term buy and hold investors, not traders. I don't give stock picks. What I'm trying to do is give you more of a framework for portfolio management, be diversified, don't just own hyper growth tech stocks, don't day trade, be positioned for capturing long-term compounding wealth. You want to be diversified. You want to own index funds, you want to own assets like Bitcoin or gold, and you also want to own individual stocks. And that can be like your portfolio that is separate from your 401k. That's a DCA strategy. Like, this isn't really a dollar cost averaging strategy I'm giving you. This is not what that portfolio would be. This would be like buying when there's blood on the streets. And, of course, you're going to trade a little bit, like I will trim some profits here and there if, a stock's getting too large, or my position is too large in the stock. So definitely trying to give you an idea of like what the podcast is supposed to be and what Rigatoni Capital is all about, what I'm about as an investor. I don't trade. I don't really care about headlines, and I'm buying individual stocks mostly, but I also buy index funds like the Nasdaq 100, and I buy and hold them. Yesterday we talked about Claude kind of giving me a market briefing. This is what it looks like. It's a market intelligence briefing report that is sent to me automatically at 8 a.m. I continue to revise the prompt because it didn't even tell me that the supreme leader of Iran was killed in a missile strike. So it's missing like some very important geopolitical information that would have been necessary for this briefing report. So Claude it's good. Like, it's cool it did this. The one thing it did differently is that it gave me a black background for a PDF. That was different today. I don't know why it changed. It's a little easier on the eyes, but this is a 9-page report. And the 9-page report goes over, what you need to know as if like you're a professional investor walking into your office and somebody grabs you like an assistant, or, someone wants to brief you on what happened. Definitely a lot of mistakes though. I mean, it needs a lot of revising for the prompts for it to work well for me. Now, this section here is called the US equities section, where it goes over major movers of last week. I thought this was important to go over because it shows you that something like Dell reported earnings, the stock shot up 22% based off of record AI server demand and $10 billion buyback announcement. I didn't know they report it. So that's why I have this briefing. And it makes me think like, wow, so there are stocks that are reporting good earnings and actually shooting up. I thought maybe there was a trend forming with somebody like Nvidia, who reported an excellent quarter, blowout earnings, beat everything and got it higher, and just like it couldn't have been more perfect. And the stock sold off 6% after earnings. So it tells you like that's not really the trend happening, because someone like Dell, obviously it's a different company. Obviously it's a lot smaller of a company. Dell's $100 billion market cap. Nvidia is a $4 trillion market cap. So you can't really compare them too much, but you can see how certain stocks are getting rewarded. And I thought that was important. Duolingo If you know the language learning app on your phone with the green owl, I recommend following Simeon McMillan on Substack. His newsletters accrued interest. He has been bearish on Duolingo, while a lot of well-known investors have been still bullish on the name and kind of saying like, hey, like this stock is going in, it shouldn't be going in this direction. It shouldn't be selling off. Like there's value in this stock. And Simeon kind of breaks down on like why he thinks this stock is actually not a great stock. And maybe it's a good business, and maybe the app is sticky and everything, but he doesn't think that this is a great stock. And he goes into detail why. And I've had him on this podcast before explaining why he is bearish on Duolingo. But man, that stock has been getting crushed. Someone like Joseph Carlson on YouTube, who has a very large following, took a stab at Duolingo and he's still holding on to it. And there's a lot of other well-known, like kind of like social media influencers that are still holding strong on Duolingo. I wonder what they're going to do now that it's really getting beat up badly. I'm not sure. I mean, I don't own the stock. I'm just curious to see how these guys manage this. Maybe they admit they were wrong. Salesforce CRM, that stock reported last week, which was a great report. Obviously, it's in the AI disruption ground zero, in terms of seat-based licenses. And, it still did really well. And look at what the stock didn't really bounce back much. It sold off right after earnings, after a good earnings. It did come back a little bit, but I mean, if you look at a longer time frame chart, Salesforce still looks like crap. And personally, I wouldn't touch it. Axon Enterprises used to be Taser. They are a software to government application for, local police departments, local municipality, the government. Axon Enterprises is a hyper growth stock. It's an incredible stock, by the way, incredible business. The problem is that the stock is really expensive, in my opinion. Now, Axon sold off with all the AI disruption fears with the other SaaS names, and probably shouldn't be. I would agree with that. People that would have bought it before earnings on the SaaS sell-off would have made, a nice trade. I don't trade, but it probably would have been a good time to buy. But Axon can trade down from here. Nobody knows short term what Axon's going to do here. And I'm holding off on adding this stock to my watch list. I've had it on my watch list, then I take it off my watch list. I can't decide if I want it on my watch list. But I bought Palantir instead, which is crazy expensive too. So I don't need two really expensive stocks like this. And American Express and Goldman Sachs. Private credit is obviously a concern. It says AI and unemployment concerns on here. Yeah, like American Express is a big corporate segment. So, if there's going to be all these white collar job losses, people are afraid that American Express would suffer there. I think American Express is a great company. It's a great stock, but it's a stock I would only buy once in a lifetime. Like you're going to have one opportunity to enter, and like COVID would have been that time for American Express. I don't know if now is the entry time if you want to buy and hold a stock like an American Express. I don't know if now is the time. I definitely like the company and I wish I owned it. It's been a great stock. And then it shows you like Paycom. I don't know if they reported or not. I don't follow Paycom. It's too small. Well, I don't know the market cap of Paycom. But this says SaaS seat license compression thesis playing out. Yeah, like I agree with Jordy Visser on this strategy. And the strategy is not to try to cherry pick the bottom on Paycom, Workday, Monday, Salesforce. I'm missing a few other names here, but like those type of like HR, CRM type of companies, those software type of companies, you know, there has to be something that happens first before those stocks eventually come back to life. I'm not sure what it will be. And what I've discussed before is that I'm afraid that someone like a Salesforce that has 67,000 employees and Workday has like 35,000 employees or something, you know, they're going to need to see major layoffs before investors or capital comes back to those stocks. That's what I'm afraid of. It's kind of like, hey, Jack Dorsey came out and said, like, our AI tools are so good that we're going to bet on them now instead of employees, and we can, cut 4,000 jobs. And, I'm wondering why, like, Salesforce hasn't done something like that yet. And it's political. If we're going to see like all these job losses and stuff, they have to make a decision if it's worth, a Trump tweet or a Truth Social, or it's not a good look, to just lay off a bunch of people. Now, Block could get away with it because they're a smaller company and they had a smaller sales force. They had a smaller em- employee base company. I think there were only 10,000 employees at Block. So it's smaller compared to Salesforce that has 67,000 people. Huge companies. Remember, Palantir has 4,000 or 4,500 employees, and AppLovin has like 1,500 employees. So it also says corporate buyback activity hit a record $233 billion in February. That's really interesting because I thought with AI CapEx for the hyperscalers and the Mag 7s, they wouldn't be buying back as many shares. So I hope that's not giving me wrong information. And then, it looks like it breaks down some other things. It breaks down some NVIDIA's earnings report. It breaks down Salesforce's earnings report. And then it tells you a preview for Broadcom. And we'll talk about that in a little bit. It gives me international markets. This is cool. It gives you an economic calendar, next 5 trading days. Even gives you like, what China is going to release. They're going to release PMI on Monday, allegedly. And then it's going to give you upcoming earnings schedule week of March 2nd to 6th. This isn't that good because I want to see the earnings whispers picture where he shows the stock ticker logos on there and everything. I mean, this isn't helpful for me because it says if you go down to Thursday, March 5th, it shows you, and Wednesday, March 4th, it says large batch, 159 companies are reporting. And then on Wednesday, March 4th, it does say Broadcom's reporting, but it says on Wednesday, March 4th, also another 113 other companies are, and the tickers are various and the time is various. I just need the picture, the earnings whispers picture. Gives me key themes, and that's about it for this report. So it's got a lot. Claude has a lot of work to do. I have a lot of work to do to make this better. It's not exactly what I want yet. And then I want to show you the photo again of the US Aerospace and Defense ETF. That's the ITA. Okay, I did a little more research this morning because I told you that I thought I was all hot shit because I bought RTX and I bought LMT 10 years ago or 11 years ago. I bought Northrop Grumman 6 years ago. I own L3 Harris. I own TransDigm. I own individual missile companies and fighter jet companies, and I thought that was the way to go instead of owning the ITA, which is the US Aerospace and Defense ETF. Now, why did I say that? Because I don't need exposure to Boeing that manufactures commercial airplanes and has so many headline risks. Yeah, GE Aerospace, it's 20%, 21%, and it's been an unbelievable stock. Like, long story short, I always thought Boeing was too large there. It doesn't even have Palantir in here, but it has Axon in here. So I didn't think the ITA was all that great, and it's a 0.38% expense ratio. Okay, but I did an overlap. The ITA versus Lockheed Martin versus General Dynamics versus L3 Harris, Boeing, RTX, right? Northrop has been an unbelievable long-term buy and hold stock. And I had to take it off here because that has been one of the best stocks out there. Let's look. I'll add it out. I'll add it on there. As you can see, Northrop Grumman is up since 2009, 2008. It's up 1,000%. So just to make the chart look, the overlap chart look a little bit better, what I want to show you is that, I was wrong. I thought that the play was to own these individual names, but you could have owned the ITA and beat LMT, the S&P 500, L3 Harris, RTX, General Dynamics, and Boeing. The ITA is a market cap weighted index. I just assumed that ITA didn't do that well because it was such a heavy holding, because Boeing was such a heavy portfolio holding in ITA. And I would have been wrong. I would have been better off just buying the ITA. The ITA is up 643% as of the Great Financial Crisis. In the last 5 years, the ITA is up 155%. The only stock beating it there out of these big defense manufacturers is RTX. RTX is up 181% over the last 5 years. The ITA over the last 5 years is beating the S&P 500. The S&P 500 is only up 77% over the last 5 years. ITA is up 155% over the last 5 years. Incredible. I was so wrong. Over 1 year, L3 Harris is up 78%. The ITA ETF is up 60%. And then below it is RTX, Lockheed Martin, General Dynamics, Boeing, the S&P. So this ITA ETF has been a great stock, and it's because of this GE Aerospace top holding in there. It has Helmet Aerospace, tickers HWM in there. It has TransDigm, which is a great stock. It has Axon in there, but that's a smaller holding. And even let's try to add Boeing and see what Boeing's been doing, because I really think Boeing's a tough company to own. So Boeing's up over 1 year. Boeing is up around like 31%. So yeah, wanted to show you the overlap of why I was wrong. I said that the ITA was meh and that I would rather own, defense manufacturers individually. And I think ITA is the way to go. I might add the ITA to my watch list one day. I want to show you real quick Broadcom. That's supposed to report on Wednesday. This is the bar chart on total revenues per quarter, net income, and free cash flow. As you can see, last quarter, their total revenue was over $18 billion, and they are projected to hit over $19 billion, and that's like a 23 or 24% year-over-year increase. That's pretty good for Broadcom, right? And then I do an overlap chart here of the SMH versus Broadcom, NVIDIA, AMD, TSM, ASML. The purpose of this overlap chart was really just to show you how Broadcom and NVIDIA have run out of breath here, especially since kind of like late quarter four of 2025. You can see it's kind of like running out of breath, right? And like ASML, Taiwan Semi have been on a tear. The physical manufacturers of the actual chips themselves. And AMD has also been, doing well. Surprisingly, I didn't think it was doing that well. It's such a volatile stock, always has been. And so, like, for example, for people that are listening, Taiwan Semi over 1 year is up 108%. Broadcom is up 60% year over year. NVIDIA is only up 41% year over 12 months, sorry. S&P 500 is only up 16% over 12 months. So you can see how, it's like, again, the law of large numbers, the large market cap companies like Broadcom and NVIDIA are losing steam. Let me show you what the street is thinking that Broadcom's going to report. It says that earnings per share, the consensus estimate is representing a 27% year-over-year growth on earnings per share, and revenue up 28 to 29%. It's crazy. So it's saying key factors to watch for Broadcom's earnings report on Wednesday is the margins, of course. It's expected to be around 77%. This is gross margins. AI backlog and custom silicon. Markets will look for updates on the $10 billion AI backlog and demand for custom AI accelerators, XPUs, from major hyperscale customers like Alphabet and Anthropic. So, I didn't think Broadcom puts backlog on their report. So that's something to think about. Like, if they do, that's cool, but I don't remember seeing that they report any kind of backlog. It might just be a verbal. I'm not sure. And yeah, that's about it. And, you can find me on Substack under handle Rigatoni Capital. I send a newsletter out like once or twice a week. Haven't been doing it lately. Well, that's not true. My last Substack post was on February 24th, titled "The King of Software Owns Landfills and Heavy Asset Stocks." And it was about Bill Gates and Michael Larson and what they're buying, or what they buy and hold as long-term investments. They buy halo stocks, heavy assets, low obsolescence stocks like waste management, farmland, stuff that can't be disrupted by tech, and like not tech, but like AI can't be disrupted by software. And yeah, that's about it. So again, the point of this show is for long-term investing. I discussions. Sometimes I have guests come on the show and talk about what they're investing in and not investing in. And yeah, I'm on Spotify, I'm on YouTube, I'm on Apple Podcasts, and all the major platforms. All right, thanks, and have a great day. Bye.